Woo, there it is, ladies and gents. Welcome back, and it's Monday, and let's talk about one of the great subjects, gold. Yeah, baby, let's jump into this thing. Here we go.
Shut up and sit down.
Is your business in need of customers? Then you found the right show. Hernan Cias is the business bro, and he makes getting customers fun and easy. Watch, listen, and learn as each episode is designed to sell. Welcome to another episode of
Business Bros. Yeah, what up, ladies and gents? Let's do this thing. I got a great show for you guys today. So, who do we got on the show? Oh, it's a fire guest. Show me the money. Now, we're currently experiencing very volatile times, especially when it comes into our currency. What will it be? Will it be the dollar? Will it be crypto? Will it be gold? How do you deal with all this uncertainty? Well, gold has historically been an anchor when currency is in question, and today's guest is helping investors build balanced portfolios by acquiring royalties and streams and similar interests at varying stages in the mining cycle. So whether you want to invest in precious metals, the mining, or any of the stages in between, then today's episode is for you. So let's welcome to the show, CEO of Gold Royalty Corp, David Garofalo. All right, David, welcome to the program, my friend.
Thanks for having me on.
I'm excited, dude. Gold, first of all, has been one of those staples. One of the first times I really got introduced to this thing was back when I must have been like 18, 19 years old. I picked up this book by this guy named Robert Kiyosaki, and he tells me all about the time Nixon takes us off the gold standard. And ever since then, I'm like, what is this relationship with gold and money, and how is it affecting my portfolio? So, I just want to ask you, what problem is it that you're solving here? What problem do you solve, David?
Hey, we've got a problem here.
It's the debasement of paper currency. And what's going on is all the central banks in the world are competing to debase their currencies by printing more of it. And the reason they're doing that is, one, to stimulate the economies, but two, because all these governments have strapped on all this debt. The only way to actually conceivably deal with that debt is to basically devalue it by inflation. So inflate the debt away. There's no conceivable way for them to repay the debt. So they'll undermine the currency, undermine the debt, and make the debt go away. But what that means is that it introduces inflation into our lives, and inflation eats away at your savings every day. We have double-digit inflation right now. If you're putting food in your stomach, fuel in your car, a roof over your head, you're deep into double-digit inflation territory. And that means every day your purchasing power of your savings goes down.
And we're literally seeing that. I mean, you don't have to be a big time investor to go to the gas pump and notice that, especially here in California, you're pumping at almost $6 a gallon. You go to the grocery store, your grocery bills are ridiculously high. Now, you said something that caught my attention. I kind of want to clarify this. You're going to inflate the debt away. Why would anyone want to do that? I mean, that's like me saying, you know what? I owe my buddy $1,000, so I'm going to go grab a credit card and another equity line of credit. I'm just going to borrow all kinds of money to solve my problem. It just doesn't sound like it makes sense, David.
Well, it's effectively what's happened is this has been a big fiscal stimulus party, monetary policy party over the last dozen years or so as we came out of the credit crisis back in 2008 and 9. And, the central banks did that to stave off financial ruin. The financial institutions, banks would have collapsed if they'd introduced all the stimulus into the economy, but they never stopped. It's been unrelenting expansion of money supply since that time, and governments increasingly spending more than they actually take in tax revenue. In other words, increasing their debt level. So, if their interest rates are 1 or 2%, on US treasuries, but inflation is 12 or 13 or 14%, the value of that debt goes down every day. So basically the lenders, if you own a bond, you're a lender to the government. The amount of your debt, the value of that debt's going down every day if your interest level is below where inflation is. It's getting eaten away. And that's the way central banks are dealing with and governments are dealing with their debt situations, is they're inflating the debt away.
So we see this, right? We're the general public. We might not understand monetary policy, GDP. We might not understand all the technicalities of it, but we see the writing on the wall. This is not good. The federal government is borrowing at ridiculous amounts. My dollar is just losing value every single day. So what do I do? What are things that I can do to hedge a bet against what I see happening?
What do you do?
Well, one thing you can do is buy the one currency that can't be printed. Paper is infinite. Gold is very, very finite. And gold has been a currency for 4,000 years because for that simple reason, they can't be printed, can't be created. It's very difficult to mine. Supply goes up very, very incrementally every year. We only add about 2% to supply a year from our mining activities in the mining industry. And we can't flick a switch and increase supply because mines are so difficult to build. They're capital intensive. You can't increase supply in response to a higher gold price. That's certainly not the case with paper currency. So buy the currency that you can't print, that's finite in quantity, that's been recognized as a currency for 4,000 years by everybody in every corner of the earth.
Right now, you're getting, I'm going to roll the clock back maybe 10 years. If I go back 10 years, I'm really only talking about currencies as far as a nation is concerned. So like the yen, the peso, the dollar, right? Currencies versus some commodities or some precious metals, that sort of stuff. But today we're being introduced to a whole new wave of currencies, this crypto world, right? And there's people who are like, this is the wave of the future. And then there's the other side, which is, look, gold's been historically what we go to. This is really the foundation of how a lot of these currencies work. When you're speaking to investors out there and they're looking at different things, why is gold the place to go?
Well, because it has scarcity. And that's the problem with all of these fiat currencies, and for that matter, digital currencies, is they don't have scarcity. They can be created out of thin air. And that's true for paper currencies, it has been. And that's why every fiat currency that's ever been created by man ultimately has collapsed. It's disappeared. It's been debased. And the temptation is there for the governments and central banks to debase it as what's currently happening. And eventually, the broader public loses confidence in that currency and it disappears. That's going to happen to every one of our fiat currencies and digital currencies that exist today. Gold is the one steadfast currency. It's been there for 4,000 years because it has physical properties. It's scarce. It's indestructible. Has been recognized by humans since the beginning of time as the ultimate currency. So that's why I think gold is relevant today, is because there's been this proliferation of digital currencies, fiat currencies, that anybody can create. And how does that have any intrinsic value if anybody can create them out of thin air?
There's this great book that I read, and it really details out how, dynasties and governments who've ever gone on a fiat currency end up failing. It's called Principles of Dealing with the Changing World Order by Ray Dalio. Great book, great way to kind of get an understanding of how these fiats go from a great idea to zero, and they go to zero pretty quickly, no matter what, historically going down, just like you were explaining. So if I want to get invested in gold, right? I mean, you decided to get into this space. There are a number of different ways that we could do this. Tell me a little bit about why you got in this space and then the different ways that we can invest.
Why are you doing this?
Because I want to know.
Well, because, I'm a mining guy, actually. I've been in the mining business for 32 years, building and operating mines. And, I've switched over to the royalty side of the business because if you believe in gold as an asset class, you're right, there are various ways to play it. You can buy the physical commodity very readily. You can go to a bank and buy coins. You can buy bars. Of course, you have to, you have to undertake the storage costs and the trouble of doing that. And that's fine. I think everybody should have a percentage of your portfolio in gold. And I think that's a great way to play gold. But then if you want leverage to the gold price, if you want your profitability to go up as the gold price goes up, then you could buy the mining equities, the producers, the guys that actually produce the gold. So if gold goes up 10%, then their profitability could go up 20 or 30% in a stable cost environment. But of course, we're not in a stable cost environment right now. We're actually seeing inflation infect the supply chain within the mining business as well. So their costs are going up. And even as the gold price goes up, their margins are probably getting squeezed a bit. So they're not likely to perform as well in an inflationary environment as you might hope. And that's why I've switched over to the royalty and streaming side of the business. What we do is we put capital into mines, but we take back royalties on the properties. We get a fixed percentage of the revenue, the top line. And so we're not exposed to the operating cost structure within the mine. So their costs can inflate, but it wouldn't affect our ability to extract revenues from the mine because we're just taking a percentage of the top line. So it's the best of all worlds. It gives you that leverage to the gold price, leverage to exploration as well, because our operating partners quite often explore around their mines and they grow their deposits, and our royalties go on to those exploration extensions as well. But we completely insulate our shareholders from operating capital cost inflation because we just take a percentage of the top line. So it's the lowest risk way to play the gold price, in my view, with the highest profitability.
And investors are investing in all phases in this? Is that like it's kind of structured? I mean, the way you're describing it kind of reminds me of like the Dow Jones, for example, right? It's a group of different companies come together. So this is not just one individual mine. This is an entire process that investors are working with, right?
That's exactly right. In fact, we have a very well diversified portfolio of royalties. We own 192 royalties in various jurisdictions in the Americas. 28 of them generate cash today or in the process of getting built out to generate cash. And as a result, we have the highest compounded average growth rate in revenue in the entire gold industry at 60% per year. And we've been able to achieve that in just over a year of existence since our IPO in the NYSE in March of 2021. And we've had such success in building out that portfolio, we're already paying a dividend. We pay about a 1% yield on our stock. And given that growth in revenue that we expect to realize over the next 5 years, we have a high degree of confidence that that dividend will go up.
So if is there any upside to, like, let's say a mine, like I remember talking to somebody on the show and they talked about the different phases of gold mining, right? There's the discovery part, then there's actually the excavation and the mining part, and then there's the actually trading in the metal itself. Is there any payout for investors, like let's say when they do discover a mine and it does become productive? Does that help with the dividend, or is there a buyout and share price later on? How does the investment work?
Well, we have a really well-balanced portfolio of those 192 royalties. So we own cash flowing royalties, as I said, 6 of them cash flow today. We have another 22 that are in development, will be cash flowing over the next 5 years. And then we have another 160 odd royalties that are at various stages of the life cycle of a mine, from early stage exploration right through to feasibility. So we have a lot of growth embedded in our portfolio for many, many years to come. It's quite a pipeline. So we're exposed to early stage exploration success. We're exposed to cash flowing assets. We're exposed to assets that are in construction, and we're exposed to assets that are on the cusp of construction, that are in the feasibility stage. So really, we provide balance right across the life cycle of a mine. So that means we have a lot of growth for many, many generations.
So if somebody wants to get involved, and maybe they have large capital investments, maybe they're a credit investor, maybe they're not, maybe they're just starting to open up a stock portfolio. Who is this investment like typically made for?
I am looking for qualities beyond the physical.
Yeah.
We actually have investors right across the spectrum, from large, sophisticated institutional investors like mutual funds and pension funds to the smaller retail investors. And really, it's made for everybody. I have my kids in the stock as well, and they're just starting their investing career. They're still relatively young in their early adulthood. So really, it's we're traded on the NYSE American under the stock trading symbol GROY. We're a very liquid stock. We trade typically about $5 million US per day on the NYSE American, which is one of the more liquid stocks relative to our market cap in the sector. And so it's easy to get in. It's easy to capture profits when you're ready to get out. So given the dividend paying nature of the investment, the low risk proposition, the diversity of our portfolio, it's a really low risk proposition to play the gold price.
People are always trying to time a market, especially when it comes to stocks. I mean, they're trying to do it with real estate right now. I can imagine the stock market is going to be very similar. But we're looking like we're heading into some rougher waters when it comes to our economy. Traditionally, when you're investing in gold, either EFTs or stocks or just gold itself, how does that downward market affect gold usually?
Well, typically in that environment, then the government's stimulating the economy with low interest rates, expanding money supply, and that's hugely constructive for the gold price. Because as I said, you can't print gold, whereas you can print an infinite amount of fiat currency, and that really inflates the gold price, inflates hard assets generally, real estate, other commodities because they're quite scarce. There's a finite amount of that where there's an infinite amount of paper and fiat currency chasing that. That's why we're seeing real estate prices inflate to the degree they have, particularly in urban centers. Gold will do well in that environment. Then again, the question you have to ask yourself is how do you best participate in a rising gold price environment? And my argument is it's in the royalty and streaming space because it provides you optimum upside to the gold price while completely insulating you from inflation and cost because of our top line exposure. So that's the best way. And it's been demonstrated in the ups and downs of the gold cycle. Streaming royalty companies outperform both the commodity and the mining producers because they provide that low risk way to expose yourself to gold price.
Last time I checked, gold was sitting somewhere pretty over, I think it was over $1,500 an ounce somewhere last time I checked.
It's
been a
2,000.
while.
It's
$2,000 an ounce, even crazier. So when somebody gets ready to, let's say they want to invest into the gold standards, like I don't got $2,000 to buy 1 ounce of gold. What does that even look like? How do I get involved? What is the process for, especially somebody who's just new to this space and realizes that this is an opportunity? What is buying into your investment look like? Does it look like a piece of gold? Is it a piece of paper? How do I do it?
Well, there's a couple ways to buy physical gold. You can line up at a bank and get coins. You can get bars, and you can store it in your safety deposit box, and you're safe at home. Whatever you want to do. Of course, you're going to have to incur storage costs to do that. The other way is to buy the ETF on the NYC. It's called the GLD. It's physically backed by gold. So if you don't want to worry about storing the gold, have somebody store it for you through the ETF. But of course, when you buy physical gold, it doesn't grow in size. You don't get expiration upside. When you buy a producer or a royalty company, you get that expiration upside because quite often mining companies are drilling for new deposits or they're expanding existing ones geologically, and you want that upside to the expiration. And so typically you buy the producers and the royalty and streaming companies that get that leverage to the gold price and leverage to expiration you can't get in only physical commodities like gold.
Is there any fear when it comes to government seizing gold? I know that has happened in the past and people worry about things like that, which is why they rather have gold and put it in a safe, get all gangster with it. But I mean, having the EFTs has definitely a lot of upside. Is there any fear that it might be seized or taken?
Well, that's happened before. It's happened in the United States. Not that long ago, just post World War II, there was a confiscation of gold. So there is that fear, and we see it time and again in developing world where physical gold is confiscated when central bank reserves are undermined or the currency has lost confidence of the population. And so, owning some physical, and I definitely espouse owning physical in your portfolio, maybe 10 to 15%. But if you're looking for leverage to that, leverage to the gold price, leverage to expiration, then you're going to have to look further down in the food chain at royalty and streaming companies that, as I said, provide that topside exposure, but also provide you expiration upside that you don't get in the physical commodity. So it's about trying to find some balance, and having the physical does protect you from that confiscation.
Now, we always relate gold to money, right? But the truth of the matter is when you're talking about mining and precious metals, there's more to it than just gold, and there's more to it than just money. A lot of the metals that we're using, the precious metals that we're using, are used for a lot more than just a currency exchange. I mean, literally in our computers, in the cars we drive, especially going with the new, solar power, or solar panels, and everything that we do in the electrical space. All that requires some of these precious metals. So, not just on the money side, there's other upsides to investing in EFTs like this because there's other opportunities. Can you describe some of those to me?
Yeah, there's absolutely industrial application for precious metals and for commodities generally, particularly when we start to talk about decarbonizing our economy and lowering our carbon footprint. And, solar, you talked about solar panels. Electric vehicles use 3 times the amount of copper that a standard internal combustion engine does. So commodities and mining generally extremely important and integrated in our efforts in order to decarbonize our economy. So gold and precious metals do have that kind of industrial application and importance as well. But make no mistake about it, what's going to drive the gold price up and continue to do that is the fact that we're going to have lower interest rates for longer. We're going to continue to have vast amounts of money printing, which will undermine fiat currencies and undermine the confidence of the general population of those currencies and drive capital into gold, which is extremely scarce. In fact, if you took all the gold that's ever been mined since the beginning of time, it's only 200,000 metric tons. And to give you a sense of what that looks like volumetrically, it would fit in only 4 Olympic-sized swimming pool. It's tiny. It's a tiny amount of volume. So you can imagine a small reallocation of capital out of the general equity markets into gold would make the gold price go parabolic.
Oh my gosh. I mean, 4 Olympic pools, it doesn't seem like a ton. And I guess that's what gives it that scarcity feel, right? There's only so much. Do you feel like there's like some sort of huge limit, or is it just the difficulty of mining that limits the amount that we have?
Yeah, well, as I said, we have 200,000 metric tons above the ground that's been mined since the beginning of time. But as an industry, we mine less than 4,000 metric tons a year. So about 2% that we add to supply every year. And that's going down even as the gold price goes up, because the industry hasn't been reinvesting in exploration and mine development to replace their depleting reserves. Reserves in the ground are down 40% from their peak in 2012 because of the lack of that reinvestment in exploration. And so that means the industry is experiencing an existential crisis. Their reserve lives are down to less than 10 years, which doesn't sound like a short amount of time, but it typically takes minimum 15 to 20 years from discovery to first production to bring a new mine up and running.
That's a long time. I mean, that's a huge capital investment. I mean, there's a lot that goes into just the discovery, and getting 10 to 20 years. If I'm an investor, do I even have that kind of time to wait? And, one thing, I'm going to line it up for you here. This is one of the reasons why we should be investing in something like the EFTs, right?
That's right, because of the scarcity factor, because of the inability and inelasticity of getting a supply side response to the gold price. You don't get supply reacting to higher gold prices. In fact, capacity utilization in the gold industry is about 96%. In other words, there aren't any idle mines sitting around waiting for a higher gold price that we can just flick on and off in response to metal prices. The reality is, given those long lead times, it's going to be a long, long time before you're going to see a supply response to higher gold prices. In fact, supply is going the opposite direction from where the gold price is going right now.
And give me a little bit of background on the company itself, because it's one thing, okay, we understand the scarcity of gold. We understand that it's a great investment. The next thing we need to understand is this company the company that I want to be investing my money in, right? So tell me a little bit about the background of your company and where you're at, where you're going.
Yeah, so as I said, I started out in the business in the last 30 plus years, actually building and operating mines. I've been involved in the construction of 15 mines in my career. And most recently, I was the CEO of Gold Corp until I merged it with Newmont to create the world's biggest gold mining company by market cap and production. And before that, I was running a base metal company called Hudbay, which is still a prominent copper producer here in Canada. And before that, I was the CFO of Agnico Eagle, the third biggest gold mining company in the world. And I was in that role for 12 years. So I come by my credentials, honestly, by building up operations from the ground up, but recognizing that we're in an inflationary cycle, and the best place to play the gold prices in the royalty and streaming business. I founded this company a little over a year ago with initially 14 royalties. We listed on the NYSE and got a $90 million capital raise and a $200 million valuation. And then we used that currency to start to consolidate a fragmented industry. We bought 3 of our competitors last year, and we merged with them and expanded our royalty portfolio 15-fold, from about 14 royalties to over 190 royalties currently, and grew our cash flow dramatically to the point we now have a dividend that's likely to grow over time as we realize 60% compounded average growth in our revenues over the next 5 years from some of the best assets in North America. We have a royalty on Canada's biggest gold mine. We have a royalty on Canada's second biggest gold mine. And we have a royalty on the US's biggest gold mine, Goldstrike in Nevada, and the underground extension of that. So that really creates a foundational element that really supports cash flow for decades to come. And then we have these other 190 royalties that provide cash flow, that provide exploration exposure, that provide development exposure to various assets. It's a very well-diversified portfolio with very strong cash flow for many, many years to come, and a dividend.
All right, so to get things straight, you didn't start yesterday. You've been at this for quite some time, David. Being a CFO, being a CEO of some of these companies, going through acquisitions and mergers, that's no easy feat. You've been through that quite a bit. And a lot of the entrepreneurs that we talk to are not at that level. They're hoping to get to that stage. Can you give me any words of advice to structuring or putting together a deal that maybe looks difficult to bring together, but for some reason you managed to bring the partners to become one unit? Like, I know everybody has a different idea, everybody has a different mission for their company, has a different agenda. What do you do as a CEO to bring those different ideas together and put them in the same boat, going in the same direction?
Well, it's all about the people. I'm not a one-man band. If you look at our board of management, collectively, we have over 400 years of industry experience, many of us as developers and operators. And that gives us two distinct advantages. It gives us a clear-eyed view of the underlying risk of the opportunities we're investing in and taking royalties back on. But what it also gives us is access to anybody in the mining industry. I can guarantee you that everybody in the mining industry is known by one of our board members and management. And as a result, that's why we've been able to execute our growth so quickly and so successfully, is we've been able to buy these things on a bilateral basis. We didn't go into competitive processes, which tend to drive up prices and drive down returns. We had access to people that we knew through friendships, former business associates and whatnot, to get at these opportunities before they were available to our competitors. And that's why we've gone from 14 royalties to 192 royalties and gone from no cash flow to one of the best cash flow growth profiles with a dividend in the course of 12 months.
It's the people. It's surrounding yourself with the right people. Did you have mentorship training? I mean, when you first got into this space, was it, straight out of college and straight into the CEO spot? I mean, what was that journey like to get to where you are?
Well, I started right from the bottom. Initially, I graduated a commerce degree, a business degree back in the late 80s, and started with Deloitte and Touche as a chartered accountant in Canada, and eventually took a very junior position with a base metal company called Inmet Mining in 1990, and just worked my way up the ranks. Initially doing accounting, but then joining the project teams on major mine developments and providing commercial advice to the project teams, and then went through, as I said, 15 mine developments over my career, providing that kind of commercial perspective and raising capital to build the mines, and just learning the business from the ground up and building up a network. You're only as strong as the people you know and the network you have. And the reason I have had a measure of success in this business is because I've always been surrounded by very, very strong people.
That gives me hope. Building a network is one of the more difficult things to do. I think meeting people is amazing and fun. Nurturing the relationship and keeping it going forward, that's a whole different ballgame. So, David, if people want to invest, I know we kind of went over it again before. What's that process like? How can people get involved and find these opportunities?
Well, look, we're listed on the NYSE American under GROY. So it's very easy for you to buy our stock. As I say, we trade around $5 million US a day. So a very liquid stock, easy to buy. And when you're ready to capture profits, very easy to get out. Avoid the roach motels out there that easy to get into, but very difficult to get out of because they're illiquid. They trade by appointment. And so we endeavored to create liquidity coming out of the gate very quickly by growing very quickly and making sure we had a good, diverse shareholder base that traded the stock on a day in, day out basis. So I think that's been an important part of our strategy. It also helps drive down your cost of capital, drive up your multiples, which makes you more competitive for new royalty opportunities. And that's been a key to our success as well.
All right, David, you guys are doing some phenomenal things, and gold is definitely one of those opportunities that can really balance out your portfolio. Before we head out, is there anything that maybe I didn't ask, something I didn't cover that you wanted to make sure you got out to our audience?
No, look, I think you've covered it off really well. I think we've made a strong case for gold as an asset class, as something you want to be invested in, at least to hedge your bets against what's a horribly inflated general equity market with multiples distorted beyond recognition, with very, very frothy markets on the cryptocurrency side, the debasement of fiat currencies. You want to protect your capital. If you've done well in the general equity markets over the last few years, now you have to look at putting some insurance in place to make sure that you're able to capture some of those gains and protect your assets in a very inflationary environment. And, I think, again, the best place to do that, the most low risk way to play the gold price with the most upside, is in the royalty and streaming business. And gold royalty provides the best growth profile in the space with a dividend.
Dividends are the key. Ladies and gents, you can invest in a lot of different stocks, a lot of different EFTs, and not all of them are going to give you a monthly royalty. So finding some of these, I mean, go back to some of the greats. Warren Buffett loves dividend producing stocks. I mean, this is an EFT that can produce a dividend, means monthly cash flow. And remember, retirement isn't really an age problem. It's a cash flow problem. And this is one of those ways to hedge your bet and hedge your portfolio, really cut yourself away from taking huge losses and really take care of it. David, before we head out, I mean, we're big on video testimonials. It's kind of what we do. I don't know how many podcasts you've been on and how many of these you've done in the past, but literally with us, you just created 30 days of content in one 30-minute episode. What was your experience like recording those 30 days of content?
I think it was great. I think you shepherded me through this interview process extremely well. You had great questions. You were really well prepared. And I was delighted to be a guest.
Thank you very much, ladies and gents. That's it. Look, some of the guests we get on here will give you some great advice. Their advice is like, gold. It's worth its weight in gold. And literally today's guest is giving you the opportunity to invest in gold. So here's your shot. David Garofalo, one more place to find him. By the way, David, I don't know if you wanted me to put your actual email. It was on my thing, but I'll do this. We'll drop the LinkedIn, Gold Royalty Corp. You guys can find him on LinkedIn or scrolling across the bottom, www.goldroyalty.com. Go check it out. Literally, you can buy their stuff on the New York Stock Exchange. It's out there, publicly traded company, ready for you to go and dabble. Don't have to be an accredited investor, right, David? Anybody can do it?
That's right.
Anybody can do it. So there's certain things where you have to be a certain level of income. This is not one of them. Go in, get your investment, do a little bit of homework, ask your financial advisor for the best advice. Never take financial advice from someone on a podcast, but make it a starting point. One more spot, www.goldroyalty.com, goldroyalty.com. Dave, thank you very much for being on the program. Ladies and gents, we'll catch you guys on the flip side. Peace. And we're out.
Thanks for watching The Business Bros. If you're ready to get more clients and want to work with the Business Bro, visit our website, www.businessbros.biz, and click on the Need More Customers button, or learn how to generate more referrals with a video testimonial packages. Go to www.businessbros.biz.